Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the first low time frame bullish scenario where we're looking for a 5-wave structure to the upside, where currently price is inside a wave 4 that is either already finished, after which we expect a 5 to the upside, or we're going to find one more low, which I think is something that I prefer at the moment. Now in this particular scenario, you see a channel that I pulled from the low to the low of wave 2 to then the high of wave 1. And what is normal in Elliott waves is actually channeling is very important, and that a wave 3 usually goes outside of this channel. As you can see, it went outside, backtested, moved up. And what is also common is that a wave 4 re-enters the channel again, where the lower trend line in this case is a potential target for a wave 4 as well. Now we didn't yet reach the trend line over here, but what can be interesting is if price is going to move to the downside once more, it might reach the 382 level, the low of the channel, as well as taking this low over here at 26.1, 26.2k. And I think that's quite interesting. Currently price is bouncing and ranging around the 236, which is a target for a wave 4. It's a valid target for a wave 4, but more commonly a wave 4 goes to around the 382 area minimum, potentially even the 0.5, but that in my opinion would be quite low at the moment. After wave 4, we then expect a continuation to the upside. Now, the invalidation for this scenario is that price would continue to the downside and hit this area over here at 25.8k. as that is then the price action of wave 1, and you don't want to see wave 4 and wave 1 overlap in an impulsive structure. If we then go to the second bullish scenario, well, if price is going to move towards the downside and it is going to move far beyond the trend line over here, the channel line basically, and potentially cross the price action of wave 1, then we might be looking at potentially a wave A, B, C, or a wave 1, 2, and then a bigger 3 to the upside. Now, these fibs are taken from the low of the impulsive structure to the high of the impulsive structure, where the 382 and the 886 are common targets for a wave B, as well as all the other fibs in here, but I specifically mentioned the 382 and the 886 because for a wave 2, in potentially a 1, 2, and then a bigger 3 to the upside, the 0.5 to the 0.786 are common targets, and the 382 and the 886 are rare targets. So in a wave B, everything is common, but in a wave 2, only the one here in the middle are common targets. So if price continues to the downside, we have to wait and see what Fibonacci levels it's going to reach. Also, if we do look to the downside, we actually have a new target area over here. The week has finished the previous week, and we now have a weekly naked point of control over here, as well as a weekly level in this target box, the support area between 25.9k and 26k. So this could be a very, very interesting area indeed for price to eventually find support and then look for a move towards the upside. Then, of course, if price is moving down, and we would be looking for longs in this scenario based on Elliott waves, but you also need, of course, your own plan. Maybe you're looking for a market structure change, maybe a retracement and bullish divergences, whatever it is that gives you trust in your setup for a potential long, right? That is what you'd be looking for. Make sure all the entry requirements are hit, and then a long can be entered wherever your target is then, of course, going to be. But in this scenario, we would be looking for either a wave C or a wave 3 to the upside. And in this scenario, if we don't go that deep, well, the swing failure pattern here, taking the low would be fine, but going to the target box would feel a little bit deep at the moment. But then, of course, we could still be in a wave 5 to the upside. So still expecting more upside. Of course, the more bearish scenario is price just dumping, but this at the moment is such a horizontal price action that it feels more like corrective in either a wave B, a wave 4, or a wave B, 4, or 2 than a bigger move towards the downside in maybe an impulsive structure, for example. If we then go to the micro scenario over here, I have two counts. I have the bearish, which is this one, and a more bullish one. And in this particular scenario, we have then a WXY, where the X is positioned on this high over here. And that's important because in the bullish scenario, the X actually moves to the left. Now this X retraced to the 786, which is fine. That's a common target for a wave X. And then in this final move, we would be looking for a 3-wave structure to the downside in likely an ABC, which then is a 5-3-5 wave move to the downside, where a common target for this wave Y is between the 1 and the 1.236. And would you look at that? It has confluence with this low at 26.1k. So it is very interesting, and potentially there could be a little bit of a swing failure pattern trading setup here as well, where price is going to take the low, then close the candle above the low, that is then the entry, for then continuation to the upside. So that could be quite interesting, as this low is also inside the most common target area for a wave Y in this scenario. But in this scenario, we still expect to move to the downside. Also, if price is going to go towards the upside over here, we do have an interesting target box where we have the golden pocket, daily naked point of control, as well as the value area high of this range, the volume profile of that range. And this target box is sitting between 26.5k and 26.6k. And I think what would be nice here is if this is then a wave A to the downside, it's quite difficult to count this as a nice 5-wave structure. Like this move over here can be counted as a 5-wave on a very low time frame, but this over here doesn't really make sense for an impulse anymore. So potentially a 5, then eventually we have corrective structures, but something like this, B, C, and then move to the upside could be a nice scenario. But of course, wait and see what happens very, very locally. And in the bullish scenario, this is the low of wave Y, and we would expect more upside. Now, as mentioned, I would like and actually prefer to see a little bit more downside and maybe take the low over here. But in the bullish scenario, the low is already in, and this structure to the upside is the beginning then of an impulse. Because if this is the low of a wave 4, we have to look for a wave 5, and a wave 5 has to start with an impulsive structure, which means this on the lower time frames has to be a wave 1. There's only like one problem that I have with this particular scenario, and that is this move to the downside over here. So if we go to, let's say, the 3-minute, so even if this would be an ending diagonal over here, you would be looking for 5 waves, meaning a wave 1, 2, 3 that is lower than 1, 4, and then a 5, where 5 is again lower than 3. But if you look at the chart over here, we have then potentially a 1, 2, but we never got, like, for example, a 3, 4, 5. We only have this low and this low. We don't have 3 lows. That's very, very important, meaning this cannot be some sort of a diagonal in a 5-wave structure, because you can see over here, this might be a wave 2, this might be a wave 4 in a very, very sharp, impulsive 5-wave structure to the downside, where then this is the wave A. This is all part of a corrective structure, after which you then expect a wave C to the downside. So that's the problem that I have with this wave Y, that if this has to be an ending structure, then how does it end, right? Like, it could be an expanding flat and then a 3, then a 3, and then a 5. The problem is that for me, the 5 is ending over here and not here, because there's no ending diagonal. So that increases the probabilities for me that we are going to find more downside first before returning towards the upside. If we then look at the CVD divergences though, we have some bullish divergences over here between the two lows, higher low in price, lower low on the CVD in blue, which I'll show you in a second. However, very, very locally, we also created some bearish divergences, and that is important. So this bullish divergence is not a clean setup. A clean divergence setup is, for example, price moving up, moving down, bullish divergences, but throughout the move to the upside and throughout the move to the downside, you will not see any bearish divergences, and that's not really what we got. So it's not the cleanest setup, but of course we do have a resistance area over here. So if price does move to the upside, the bullish divergences will play out and we have resistance over here. But if we then go to the 15-minute, so locally over here, then we have a higher low on price, but look at the blue line, lower low on the blue line, right? So there's a bullish divergence target is going to be this high over here. And also the yellow line, if price might drop a little bit further to the downside, then yellow might also go towards bullish divergences. Actually, with this very weird wick low, by the way, this is, look at this, right? That's a very weird end of a structure, very likely to be filled eventually. So you might already have some bullish divergences on yellow and blue. But then again, the problem that I have, or at least it's not a problem, it's just not the cleanest setup. That's just it. It's not the cleanest setup, and that is mainly because bearish divergences over here that haven't been invalidated. If price is going to take this low, then the bearish divergences have played out, because over here we have a lower high on price, but on the yellow line, a higher high. right? Even though price then moved to the upside, it didn't take this high, so it's not invalidated. So we still have that lower high, higher high bearish CVD divergence, even though now you could say there's bullish CVD divergences again. So yeah, it's a bit of a mix, right? Like I prefer to stick around on the 15-minute time frame anyway. I just wanted to say it's not the cleanest setup. There is a bullish divergence. It can surely play out. Moving to the upside and then eventually potentially down is absolutely fine. But yeah, it's just, you know, I just wanted to give you that little bit of information that it's, you know, what's the difference between a very clean and not as much like not a very clean CVD setup over here. Now, if we look at the news for this week, I do want to highlight at least that on Wednesday, we have some high impact news. Of course, today it's Monday, so nothing's up. Monday is absolutely empty, so it might be a slow day today. Tuesday, nothing happening. Only on Wednesday and on Thursday at 4 p.m. Central East European time, there's a couple of stuff happening. High impact news. That's why the red flags are there, with Powell testifying for whatever it is. So yeah, that's what I wanted to say in this video. I hope this was helpful or valuable to you. Please check out the memberships and the most recent educational video I've made about, in my opinion, the best trading indicator you can use, which is the CVD. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.